Important note, this video is not financial advice. Always do your own research before making any investment decision. Past performance does not guarantee future results. Here's your market briefing from Rumour With AI. Coinbase is walking a regulatory tightrope. Reports confirm the crypto exchange now accepts Chinese national IDs for account verification. This unannounced rollout directly challenges Beijing's strict cryptocurrency ban. The move introduces significant legal exposure for coin stock. Regulators in Washington and Beijing are watching closely. Any enforcement action could trigger severe penalties. Investors are pricing in this uncertainty as the stock navigates a volatile landscape. Meanwhile, the traditional finance sector is celebrating record-breaking performance. Wall Street banks smashed revenue records driven by a massive surge in stock trading volume. The S&P 500 climbed to 7,543 points. This rally was fueled by intense retail and institutional flows that strained traditional brokerage infrastructure. The sheer volume of activity highlighted the capacity limits of legacy systems. Yet, amidst this trading frenzy, Netflix faces mounting regulatory scrutiny. Despite the broader tech sector gaining ground, Netflix shares dipped 0.4% to $73.53. New government targeting of the streaming giant has tempered Wall Street optimism. Analysts remain cautiously favorable, but the regulatory headwinds are undeniable. On the macro front, global trade dynamics are shifting. A new U.S. sanctions bill targeting Russia has unexpectedly eased the immediate threat of tariffs on China and India. This diplomatic maneuver alters the geopolitical risk premium in global markets. Traders are reassessing supply chain vulnerabilities as the tariff threat recedes. The reduction in trade barriers provides a temporary reprieve for multinational corporations with heavy exposure to Asian markets. Sentiment has improved, though long-term structural tensions remain unresolved. Looking ahead to corporate earnings, United Airlines presents a stark contrast to the banking sector. The Q2 2026 earnings preview reveals a severe margin squeeze. EPS is forecast at $1.85, representing a 52% year-over-year decline. This drop is driven by fuel costs surging to $4.27 per gallon. While revenue grew by 15%, the cost of operations is eroding profitability. Investors are bracing for a disappointing report as the airline industry grapples with volatile energy prices. The disparity between top-line growth and bottom-line performance underscores the challenges facing the travel sector. The interplay between regulatory risk, trading volumes, and energy costs defines today's market narrative. Coinbase tests the limits of crypto regulation. Banks capitalize on trading mania. Netflix balances growth with government oversight. United Airlines battles rising input costs. And geopolitical sanctions reshape trade expectations. Each sector is reacting to distinct pressures. The market is pricing in these divergent outcomes. Volatility remains the constant. Traders must monitor regulatory announcements and earnings reports closely. The landscape is shifting rapidly. Opportunities exist for those who can navigate the complexity. Risk management is paramount. Stay informed. Stay agile. That's your market briefing. Follow Rumour With AI for daily market intelligence.